Hi, I'm really excited today because I am going to be starting off a brand new YouTube channel, and this is the very first episode. My name is Mel, and in this video, I'm going to be sharing my journey from being a day trader to discovering Warren Buffett's investment strategy to becoming a much more intelligent investor. I'll be sharing with you what I've learned so far about the world's best investor and tell you about how you can learn about Warren Buffett's investment strategy as well. So let's go. It was December 2020. I was woken up by a notification on my phone from the CNBC app. Early in the morning, I think about 4, maybe 4:30. I opened my eyes, still half asleep. Pfizer had just announced that their vaccine had passed all the requirements to start distributing shots to people almost immediately. Like, what? I was overcome with emotions, from being ecstatic that the end of the pandemic might actually be possible to relieved that most of my elderly family members might actually escape this very dangerous era alive. And finally, it started dawning on me that this might be the opportunity of a lifetime. I was pumped. I jumped straight out of bed, I logged into my brokerage account, and it took a few seconds to take a look at the stock price of Pfizer over the past month. It had increased a little bit, about 10% over the last week, probably in anticipation of the approval, but this was huge news, and it had the potential to really increase Pfizer's revenues. So this 10% jump was clearly just the start of a steep climb upwards. I bought in as much Pfizer stock as I could afford. I even sold my other stocks to free up cash to put everything into Pfizer, as well as even bought some on margin. I was all in, and then some. And then the market opened that day, and things went a little bit unexpectedly. So it was quite wild. Almost every stock jumped sky high that day, except for Pfizer. I was baffled. It made no sense. How could a company that had just gotten approval on a vaccine that would literally bring the world back from what seemed like the dark ages, bring it back and become a functioning society again, how could that be losing value? Especially when you consider that they would be able to sell as many dosages as they could produce. How could they be losing value? It was obviously way more valuable that day than the day before, but the market wasn't treating it that way. Why was the market behaving this way? All I could keep saying that day was, this makes no sense. This makes no sense. Pfizer's stock dipped, but I didn't panic sell. I held on. However, over the next 3 months, Pfizer's stock price dipped and dipped and dipped and dipped. I was devastated. I'd lost serious money from this situation, but that wasn't the thing that was really hitting me. What was really hitting me like a freight train was the clear realization that I didn't understand the situation at all. I was completely lost on what was going on and why. And I had all these questions. How much lower could this go? Should I cut my losses? Should I hold on? Not only did I have no answers to these questions, I didn't even know how to think about them. The only investing philosophy that I'd known up until that point was buy low, sell high. But that turns out to be a very useless strategy because it's impossible to know whether you're at the low or at the high or somewhere in between. It's really impossible to time the market consistently. And so I was basically ready to give up on stocks and focus on other investment vehicles like real estate that were much simpler and easier to understand for me. I had started trading stocks about 7 years ago, and it had gradually gone from me just kind of dipping my toe in the water to really being an obsession. where I was waking up early every morning waiting for the stock market to open. It had been a roller coaster with some really good streaks, but some major cliff dives. And this one it really got to me. I was completely done with the roller coaster ride and ready to get off. So I sold off all my Pfizer stock when it recovered a little bit. And I decided to take some time away from trading and assess whether stocks were for me. And then a funny thing happened. You know that old saying where when the pupil is ready, the master will appear? Well, that happened to me. During the next week, I happened to be watching an interview of Bill Gates about the pandemic and the vaccine. And it reminded me that Warren Buffett had actually committed a majority of his wealth, a few $billion, to the Bill and Melinda Gates Foundation. And as you probably know, Warren's one of the most richest men in the world, and he made almost all of his money from investing. So I started looking into Warren. So it turns out Warren actually started from some really humble beginnings. He had invested his own money as well as the money of a small number of partners and had grown it into one of the largest conglomerates in the world with Berkshire Hathaway. And then I came across a clip of Warren Buffett on YouTube showing him saying that he'd rather buy a good company at a fair price than a fair company at a good price. This got me really intrigued because it really raised more questions for me than it answered. For example, what makes a good company a good company? What makes it a bad company or a fair company? How do you know if you're paying a good price or a fair price or a bad price for a company? I needed answers, and it seemed like maybe I had stumbled upon somebody who might actually have real answers. So I dived in deep. I read 7 books on Warren and his approach to investing. I watched about 100 hours of Warren and his partner Charlie Munger answering hundreds of questions about investing. And I read about 44 shareholder letters that were written by Warren Buffett, in which he explains in great detail his investment decisions and how and why he made them. After being deep into Warren Buffett's investment strategy for the last 9 months, I can tell you it's the most sane and rational way to do investing that I've come across. I finally feel like I actually have a framework for how to think about the questions I was struggling with during my Pfizer crisis, as well as many situations in the past. So here's a quick summary of what I've learned about Warren Buffett's investment strategy. 1, Warren only invests in companies that he believes are going to return more money to him over time than he is investing into the company. 2, Warren requires that there is a management team in place that intelligently uses capital and is trustworthy. Lastly, Warren only purchases a business when its price is well below the intrinsic value of the company with a margin of safety factored in. Now, each of these 3 statements are tips of icebergs. There is way more to these statements than is initially apparent. For example, that first statement, it has the phrase, returns more money to him. So this actually implies that Warren is actually basing his investment decisions on how much profits the company will make and not by trying to predict the price of the stock tomorrow, the next day, or even the next year. This is a very deep topic by itself, so I'm going to be covering it in one of my future videos. And that actually brings me to this YouTube channel. I'm creating this YouTube channel so that I can post videos that will help you understand Warren Buffett's investment strategy at a much deeper level and hopefully help you make smarter investment decisions and avoid the type of mistakes that I've made in the past. I'm also doing this so that I can help myself crystallize these ideas by writing them down and by being able to say them clearly to you. I'm going to be actually thinking about them a lot more clearly. I've started using all of what I've learned over the past year from Warren to start analyzing stocks. And honestly, I'm feeling like I'm actually getting to a place where I'm starting to understand a business before I ever make a decision on whether or not to invest into the company. And now, when I actually make a decision, I feel like I have strong conviction in my decision because it's based on sound research that I actually understand. So even if the market causes the stock price to dip or increase, I have the confidence to stick with my decision and commit even more by buying more, or actually I wouldn't short the stock because that's something that warrant doesn't do. But if I had if I decided I wanted to buy it, and the stock price dipped, I would be able to actually reduce my average cost by buying even more. So I feel like I'm actually starting to get value out of what I've learned over the past year, and I'm hoping to be able to give you some of the same information so you can actually start having confidence in your investment decisions. So if you're into this kind of thing, subscribe to this YouTube channel and also hit the notification bell so you can be notified about my future videos as soon as I get them posted. And as a reminder, even though I have spent a lot of time and energy trying to learn Warren Buffett's investment strategy, consider everything that I'm posting on this channel as entertainment because, frankly, I still consider myself a beginner at the art and science of investing the way that Warren Buffett does. I aim to share the best information I can and really guide you the best I can. But as Warren Buffett says, think for yourself and do your own research and due diligence. All right, that's all for this first episode. The next one is just right around the corner. I wish you peace, prosperity, and a whole lot of joy in 2020. See you all soon.